Hi guys, this is the second part of the accounting equation. In this video, we will be discussing about a detailed problem to prove the accounting equation. The question is as follows. Prove that the accounting equation is satisfied in all the following transactions of Soman. Commenced business with cash rupees 50,000, purchased goods for cash rupees 25,000, purchased goods on credit rupees 15,000, bought furniture rupees 4,000, cash paid to creditors rupees 6,000, paid rent rupees 1,400, received commission 2,000, further capital introduced rupees 10,000, goods costing rupees 7,000 for 8,500 on credit, bank loan received rupees 8,000, withdrew for personal use rupees 1,600. Now let us discuss the solution part. Now if you look at the format, the first row of the format is assets equal to liability plus capital, which is the accounting equation itself, assets equal to liability plus capital. Now coming on to the second row, transactions, and then cash, stock, furniture, debtors equal to creditors plus loan plus capital. Now this asset in the second row, the assets are divided into the types of asset. Now how will you understand this cash, stock, furniture will come here? Each and every transaction has two aspects. After reading the whole question, you will have a minimum idea of what all assets should be used. So with that idea, or if you read the transaction, I said there are two aspects, and you will understand where each transaction should be recorded twice. Again, moving on, transaction. In the transaction column, you have practically just copied whatever is there in the question. See, commenced business with cash. Again, in the question, it's the same. Commenced business with cash. Purchased goods for cash. Purchased goods for cash. Hope the point is clear. Let us move on to the first transaction. Commenced business with cash. Since the cash is bought in by the proprietor, it should be mentioned in the capital of the liability side as well as mention it in the cash of the asset side. So we mention it in the cash of the asset side 50,000 and capital of the liability side 50,000. Now second transaction, purchased goods for cash. So since there is a cash here, we should be mentioning it in the cash minus 25,000, and we should also mention it in the stock plus 25,000, since it is said goods are bought for cash. So so under the cash side minus 25,000 and the stock side plus 25,000. Now upon adding these transactions, 50,000 minus 25,000 is 25,000, and 0 plus 25,000 is 25,000. The rest of the transaction 0, 0, 0 everywhere, and then on the capital side again 50,000. 50,000 plus 0 is 50,000. Let's move on to the third transaction, purchased goods for credit. So since it is said it is purchased on credit, cash has nothing to do with this, so it is 0. And then again goods are purchased. For that you have to add 15,000 to the stock, and again you have to go to the creditors. Since it is said on credit, it will have an impact on the creditors. That is again 15,000 shown on the liability side under creditors. Again upon adding this, 25,000 plus 0 is 25,000. 25,000 again, next is 25,000 plus 15,000 is 40,000. 0 plus 0, 0, 0 plus 0, 0. Again on the creditors, 0 plus 15,000 is 15,000. Again moving on to the capital side, 50,000 plus 0 is 50,000. Again bought furniture. Now when you buy furniture, that should be in the form of cash. So less 4,000. And again furniture is a kind of asset, so under furniture head, you should add rupees 4,000. So now no other recording. Again, on adding this, 25,000 minus 4,000 is 21,000, and 40,000 plus 0 is 40,000. 0 plus 4,000 is 4,000. Again, moving on to the creditors, 15,000 plus 0 is 15,000. Capital 50,000 plus 50,000 plus 0 is 50,000. Moving on to the next transaction, cash paid to creditors. Now, cash paid to creditors. Here, cash is going out. So, under the cash, it should be minus 6,000. And again, under creditors, it should be minus 6,000 again. Why? Because cash is going out. So, minus 6,000 under the cash head. Also, creditors is becoming less. You're giving out money and reducing the creditors. So, it is again under the creditors minus 6,000. Upon adding these transactions, 21,000 minus 6,000 is 15,000. And then again, 40,000 plus 0 is 40,000. 4,000 plus 0 is 4,000. Again, moving on to the creditors, 15,000 minus 6,000 is 9,000. And again, 0 plus 0 is 0. And 50,000 plus 0 is 15,000 in the capital column. Moving on to the next transaction, paid rent, rupees 1,400. So if you pay the operating expenses, that is the day-to-day expenses to run a business, like paying a rent or even buying stationery kind of expenses, you have to show it in the cash column as well as the capital column, because the cash is paid by the proprietor from his capital. So it is 1,400 deducted from the cash column, that is 15,000 minus 1,400 is equal to 13,600, plus stock 40,000 plus 0 is 40,000, furniture 4,000 plus 0 4,000, debtors is 0, and again creditors is 9,000 plus 0 9,000, and loan 0 plus 0 is 0, and again capital you have to deduct 1,400 from the 50,000, which is 48,600. Transaction is received commission, rupees 2,000. So when you are receiving commission, it is received in the form of cash. So that should be mentioned under the cash section column. That is rupees 2,000 plus 2,000, and this commission should be added to the capital. That is 48,600 plus 2,000 is equal to 50,600. Again, upon calculating these, 13,600 plus 2,000 is 15,600. 40,000 plus 0 is 40,000. 4,000 plus 0 is 4,000. 0, 0, 0. And 9,000 plus 0 is 9,000. 0, 0, 0. Again, under the capital, 48,600 plus 2,000 is 50,600. Further capital introduced rupees 10,000. Since this capital is introduced in the form of cash, it should be recorded in the cash under the asset side. So 10,000, and then it should be recorded in the capital, that is the liability side. So on further calculating, it is 15,000 plus 10,000, 25,600 plus 40,000 plus 0 is 40,000. Again, 4,000 plus 0 is 4,000, and creditors 9,000 plus 0 is 9,000. Again, 0, 0, 0, and capital 50,000 plus 50,600 plus 10,000 is 60,600. The next transaction is sold goods costing rupees 7,000 for rupees 8,500 on credit. Now here he has sold goods worth rupees 7,000. That is, goods worth rupees 7,000 should be mentioned under the stock section. Again, the cash he receives for it, or the debtors, he doesn't receive a cash because it is sold on credit. So the debtors will be 8,500. And again, so there is a difference of 1,500 between the 7,000 and 8,500. So that is the profit actually. So the profit will always be mentioned in the or added on to the capital. That is the fund of the proprietor. That 1500, which is the profit, should be mentioned to the proprietor's account. That is add rupees 1500. Again, the value of the goods, which is rupees 7000, should be mentioned under the stock. And again, the 8500, the amount which is receivable from doing a credit sale, should be mentioned under the debtors of the asset side. Hope the point is clear. Again, upon adding these, cash rupees 25,600 plus 0 is 25,600. For stock rupees 40,000 minus 7,000 is 33,000. And 4,000 plus 0 is 4,000. Again, debtors 0 plus 8,500 is 8,500 is equal to creditors 9,000 plus 0 is 9,000. Again, 0, 0, 0. And capital 60,600 plus 1,500 is 62,100. Again, moving on to the next transaction, bank loan received. Since the loan is received in the form of cash, the amount of rupees 8,000 should be mentioned in the cash column, and also it should be mentioned in the liability side under bank loan section. Again, on further calculating this, 25,600 plus 8,000 is 33,600. Again, 33,000 plus 0 is 33,000. 4,000 plus 0 is 4,000. Again, 8,500 plus 0 is 8,500 is equal to creditors of 9,000 plus 0 is 9,000. Again, 0 plus bank loan, 0 plus 8,000 is 8,000. Capital 62,100 plus 0 is 62,100. Next transaction, withdrew for personal use. Here, the proprietor is drawing money for his personal use. Since he is drawing money in the form of cash, it should be deducted from the cash column minus 1,600. And also, since the proprietor is the one who draws money, it should be mentioned as less 1,600 in the capital column also. 33,600 minus 1,600, 32,000 plus 33,000 plus 0 is 33,000. 4,000 plus 0 is 4,000. 8,500 plus 0 is 8,500. And 9,000 plus 0 is 9,000. Again, 8,000 plus 0 is 8,000. Capital 62,100 minus 1,600 is 60,500. Reference Accountancy 1 by P.K. Lazar.